Everybody, it's Michael Lee with Distinct Group, Keller Williams Real Estate. Wanted to chat with you guys about what's going on with the market. So we've got a market update that was put together by our friends over at First American Title. So let's look at some of these numbers. So if you look active units over the last week, we've had an increase of 0.7%, so about 1% increase in units. I think what this is telling us is we're going into the slow season, off-peak season of real estate. But I think another indicator or another factor that's driving this low active inventory or low count of homes hitting the market, I think a lot of sellers, some numbers like 90% of sellers have an interest rate that's like 5% or less. And so nobody is listing their homes and buying a new home to, because they're not going to get rid of their, 3, 4, 5% interest rate and get into an interest rate that's 6, 7, 8%. So I think the time of elective moving has gone. I think right now the only people who are moving are the people who have to, right? People who have life-changing events. We're not seeing a huge increase in inventory. I think one thing that jumps out huge is pending units down 27%. I think this is a huge wake-up call, or it needs to be a huge wake-up call to sellers. Like the days of listing your home on a Friday, having a bunch of showings over the weekend, and then going under contract, with multiple offers on Monday, Tuesday, those days are gone. You need to make sure that the agent that you choose to work with is pricing your home correctly, because if your home's not priced correctly, you're going to end up sitting on the market. One of the things we do here at Distinct Group is it's called active pricing. So we're looking at the market every week. What's the market done? What changes have happened to the market? So meaning if you have your home in this pocket, in this neighborhood, what other homes have come on the market that you're now competing with? What about homes in this neighborhood? Because a buyer that's looking at homes over here, they're easily going to cross the street and look at similar homes over here, assuming that both neighborhoods are of similar price point. So what are you competing against? And if your home is, say, 25, 50 grand higher than a neighboring home that just hit the market, well, that home's going to sell before you do. So when we do active pricing, we're looking at that. We're also looking at what's recently gone under contract. Did a neighbor that we were competing with just go under contract? Why did they sell before you did? Were they priced better? Were they better condition? Right? We're talking to the agents and trying to get that information to figure out what was the differentiating factor about that other home that caused that home to sell before our home. And also we're also looking at sold comps. So were there some under contract homes that actually ended up selling, and what did those homes end up selling for? So for example, if you're listed at 650, a neighbor's home was listed at 650, but neighbor's home went under contract, and then neighbor's home ended up closing, or maybe we had a home that was currently under contract or pending when we listed, and then 2 weeks in, that home actually switched to close. What did it actually close at? Because if, for example, that home closed at 625 and we're sitting here on the market at 650, well, then we need to make some adjustments so we can keep up with the market. One of the analogies I like to use is in a market that's shifting, you got to think about it as a ball rolling down a hill. And how do you stop that ball from rolling down the hill? You got to get in front of the ball. You don't want to chase that ball down the hill. Same thing with pricing your home, pricing your listing. If you start high and you just keep chasing the market down, you're just going to eventually sell the home for so much less than if you would have priced the home correctly in the first place, and then got a buyer, got it under contract, and got it sold. And I think the closed unit, it backs up the pending trend, right? Closed units down 18%, right? So that just shows that there's been a huge pullback on buyer activity. If pendings are dropping, closed units are dropping, that means you guys definitely have to make sure that your homes are priced right. Median days on market, I think this hasn't caught up with the other market indicators yet. I think we look at days on market in the next 30, 45 days, I think we're going to see this number go from 19 to 30 pretty easily. And then what happens to this number when we're in November, December? You've got Thanksgiving, you've got Christmas. I expect our median days on market for homes to continue to climb. Same thing, supply in months of inventory up 38% from last week. So I mean, if we look at the trend, active units, not a lot of active units going on the market. Pendings and closings, down 20%, 27%. Days on market is increasing. Supply in months of inventory is increasing. I mean, I think we are in the midst of a market shift for sure. Total showings down 14%. Another indicator that buyers are not making a move right now, and I think that's because of interest rates. I mean, the only buyers out there that are moving are buyers that have to move because of a life-changing event. Now, one thing, I don't think it's all doom and gloom. I think this is healthy for the market. I think over the last several years, we've gotten very spoiled. All of us have gotten accustomed to interest rates that were in the 3% range. I have clients that have interest rates in the 2% range. And I don't think we're ever going to see rates that low again. I mean, we've got to keep it all in perspective. In the 90s, rates were 10, 12%. And those people with 10, 12% in early 2000, rates went to 8%. They were happy to refinance into an 8% rate. You look at interest rates over the last 20, 30 years, we hover somewhere between 6 and 8%. So if you look at the market over the last couple of years with such low interest rates, sellers have had it good for a long time, right? Buyers have had to compete with multiple offers. Buyers have had to pay above list price. And I think now we're shifting back into a more balanced market. So that's my 2 cents for what the market's been doing over the last week. Comment below with what your thoughts are. And as always, if you have any real estate needs, we'd love to help you with all your real estate needs. Drop a comment below or give us a call at 303-356-8282. Talk to you soon.